All right, guys and gals, back to work. Fantastic job today. Hope you guys made some money out there this morning. Boy, markets are on the move here this afternoon. Got that beautiful gap fill, that V bottom on the S&P today. And man, the Nasdaq keeps on going and going. Got that big move higher this afternoon on the Nasdaq. Now, put those two clues together. V bottom gap fill on the S&P, big move higher on the Nasdaq. That tells us everything we need to make money tomorrow morning. I have a handful of trades I'm tracking for tomorrow, 3 or 4 trades on my radar for tomorrow. We'll cover all the entries, the targets here tonight on the video. By the time we're done tonight, you'll have an easy roadmap to make some money tomorrow as well. So charts are all prepped up. Enough of the intro. Let's go make some more money on Wednesday morning's trading session. Boy, these charts keep looking great here this week. Nasdaq triple Qs are all ready. The Emini and the SPY is ready. I have 3 very simple but very important clues here on the charts in front of us that are telling us where I think the winning trades are waiting for us tomorrow morning. One of those big clues is right here on these hourly time frames right now. We are bullish overall on the S&P and SPY. We're very bullish overall here on the Nasdaq and the triple Qs. One big clue for tomorrow is the overall bullish directional bias on the hourly time frame. I like to use this hourly chart, give me the overall directional bias. But you know what these hourly charts don't do? They don't help us find the right levels of support and resistance, and they don't help us time the best entries. I have 2, I think even more important clues on some faster time frames, some tick charts that will help us wrap this all together and make some money tomorrow morning. Before we jump into those tick charts and talk entry tactics for tomorrow, let's check schedule because tomorrow is a busy Wednesday. 3 things on my mind tomorrow. First things first, tomorrow we do begin the transition from the end of the month of October into the beginning of the month of November. Anytime we have a transition from one month into a new month, scarcity comes into play and volatility begins to kick up. So end of the month volatility is expected the next couple trading days. Second thing on my mind for tomorrow is GDP and the Treasury refunding announcement. The GDP definitely is the headline number tomorrow morning at 8:30 Eastern time. Keep that on your radar. We are knee deep in peak week earnings season. We heard from ADP and Alphabet completely blowing out earnings reports this afternoon. We'll see tomorrow afternoon. We'll see if Meta and Microsoft can follow suit from Alphabet here this afternoon. So earnings again tomorrow afternoon. Be careful late in the session. A bet of big earnings. And again, keep your eyes open for that GDP number tomorrow morning with us in our trade room. Let's get back to our charts though, because it's good to know when the news is scheduled for tomorrow. But we all know by now, right? The money is made on the charts. I mentioned earlier, I have 3 important clues that are telling us where I think the money's made for tomorrow. Yeah, we're definitely still bullish overall here on the S&P. The bears are unable to hold price below that moving average right now. So this definitely still a bullish overall market. But remember, the directional bias is kind of the easy part off the hourly. Let's drill down now to our tick charts. See, tick charts are based on volume and they make entry timing, entry pattern recognition a whole lot easier. This, by the way, is a 7,000 tick chart, all the time frames there in the upper left hand corner. And if you're watching for the first time right now, welcome to the channel, by the way. That is the 21 EMA. As you can see, it's pretty much the only indicator I use to find lots of winning trades each week. I mentioned 3 big clues. One more clue here is on the tick charts here right now, a beautiful V bottom off of that low. Now, we talk about these V bottoms all the time on these videos. Anytime we see a V bottom off this low, we always say, find some of these prior swings. And usually the buyers are waiting below these prior swings down here, right? So I've marked up some key prior swings. That certainly tells us what we're looking for these entries pulling back here. The second clue is also very important. You see that range right in the middle. Now that range tells us kind of 2 things. One, we know that ranges love to rotate back and forth because they're balanced markets. So I've marked the amount above, I project that down below, and man, oh man, does that line up beautifully with that 48.25 swing. This range also tells us too that if we keep going higher, breakout pullbacks for my mind for tomorrow. That range is very, very useful here, whether or not we go higher tomorrow morning or pull back tomorrow morning. So let's put all of these clues together. Bullish overall on the hourly, got that beautiful V bottom and that trading range. Knowing that there are 4 trades I'm watching for tomorrow on the S&P. One of those trades is a very easy kind of a bear trap, right? Get underneath some of these prior lows. I would love to use this channel. I marked off the high, channel I marked off the low. I'd love to get down around this area right there and buy a bit of a bear trap there. When I say bear trap, my favorite way to get a bear trap is I want to get a pullback. You know me, I'm not going to pick a bottom on this because I don't know exactly how far this thing will go, right? I don't have a crystal ball on this. What I'll do is I'll wait for a pullback and look to trap in some inexperienced, I assume these are inexperienced sellers because sellers shouldn't be selling low down here. Once those bears try twice, then I know where their stops are, or as my first mentor would always say, I know where their pain is now, and I can buy into their stop losses. In our free video classes, I call this a failure pattern, right? It's a 2-try failure, trap the bears in, and then buy into those stops, because if you're caught short and you get stopped out, only way out is to buy your way out. These are really easy ways to make money in these environments. Now, where does the market want to go at that point? The market wants to go back up and take out that high. As it runs higher, I always like to look for a bear trap entry. Now, a technical bear trap entry. A technical bear trap entry is very simple. It's a shallow pullback that'll barely miss the moving average. It's a higher high in price, and it moves right below that low, right? So again, it'd be a failure pattern into, again, a technical bear trap pattern. It's a shallow pullback, higher high in price. Remember that strong green candle you want, closing above that moving average. Target, of course, now back up to retest the high. And as always, leave a runner. That's one of 4 trades I'm watching for tomorrow. Now, what if we don't get that failure pattern down there? A lot of times we'll get these things to run lower. And then just like today, right? They'll kind of boing right off that low like that. If it V bottoms off that low, remember, these almost always end up in some sort of this pattern, right? I'm going to mark a trend line off these highs. I'm going to bring it down off that low. I want to buy low, right? I want to buy as low as I can. If I don't get the entry on that, then what I do is I find this new channel like this. I look left, I find some prior swings, and I want that bear trap entry. I want that first test off the low of that channel. So trade number 2 of 4 trades is a V bottom reversal that bounces off of that low there. Don't chase after it. The hardest part about these is that little voice in your head is going to tell you to chase after this. I'm telling you right now, your patience will be rewarded by waiting for that first test. Remember, first test off that channel, that is a gorgeous, gorgeous bear trap entry. And really, guys, this could be any of the entry patterns you guys are learning inside our free video course. Number 3 here. Number 3, every once in a while, I'll get that nice move lower. I'll get that beautiful bear trap down here. Squeeze those stops, run higher. I'll get that first target hit, the 1-to-1 first target stop moves up to point of entry. But for whatever reason, this move down is so strong, sometimes it'll roll over and take out that low. Remember, in an overall bull market, these double bottom retests are not a reversal. It needs to go a lot more than that. I love these because anytime I see sellers up here, they become buyers down here. This is a horrible spot to be selling. One of my favorite ways to bear trap is a double bottom retest. Same idea here. I'm not going to pick a bottom on this, right? I don't know how far it will go. What I do know, though, is once those bears try once they try twice, now I've got you trapped. I can use that same 2-try failure. And again, I'm going to look for that separation off the moving average, that higher high in price, and get right below that prior swing. And a lot of you guys love these failure into trap combination. So trade number 3 out of 4 is simply a double bottom retest. These are oftentimes the most lucrative trades we find in our trade room because it traps so many people and surprises all the rookie bears. Now, I want to talk about one more trade here on the S&P. Before we do that though, let's slow down for a moment because I know most of you guys and gals watching right now, you know these patterns, you know failures and traps and range rotations. You're making money with these already. But if you're here for the first time right now, this might be a brand new language for you, a brand new strategy that you want to learn. Now, I teach this entire roadmap. I have hundreds of examples of failures, traps, and a whole lot more. I teach all this in a lot more detail in our free video classes. I'll put a link up top there for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, start making more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Take that free video course. Everyone loves all the trade examples I include in that short video series. It is perfect for anyone who's serious about making money in these markets. And also be aware too, guys, I'm going to put all the important links you'll need in the description of the YouTube video. I'll put the free video class links down there. Everyone loves the free video course. Definitely start there. Keep in mind too, we trade together every day in our trade room, 8 o'clock Eastern time. You'll love it. I'll put all the trade room membership information there for you, description of the video here tonight. And keep in mind too, I post a lot of updates. I'm always posting charts and videos, mindset stuff on Twitter or X as the kids call it these days. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully help you earn a lot more are linked in the description of the YouTube video. So where do we leave off on this? Now you know where to learn more on this. I covered 3 out of the 4 trades I'm watching here for tomorrow. Any of those trades could make us a killing. But what would happen if we keep going higher though? We had that big earnings report that came out from Google and AMD this afternoon. How do we trade this if we go higher? Well, it's actually pretty simple. Remember, this range, if we go higher here, I'm now looking for a breakout pullback. Now, when I say breakout pullback, let's get more specific on that because, people say breakout pullback all the time, but in my experience, the best types of breakout pullbacks are what we call 2-legged pullbacks. And what's a 2-legged pullback? A 2-legged pullback is just like it sounds. It's one leg. It's 2-leg. Now think about a measured move, an ABCD like I teach in the free video course. Now remember, what was resistance now becomes support. Markets love to bounce off that, in this case, the high of that trading range. Now, you know me, right? I'm not going to pick a bottom on this. And I'm sure as hell not going to use indicators to time the entries. I'm sure most of you guys have already learned that indicators, they give you too many false signals. My favorite way to do this is to trap the bears in, right? Don't try to pick the bottom and don't look for some foolish divergent signal or something like that. I think most of us have learned the hard way that stuff doesn't really work consistently enough over the long run. What I find works better is just let me wait for the pullback, wait for the bears to chase this thing lower and then run those stops, right? Because you get stopped out short, you're buying your way out. One of the easiest ways to make money is to trap traders on the wrong side of this 21 EMA. That failure into, what was it again? That separation off the moving average. You're going to be seeing this stuff in your sleep, which is good because this stuff works so well. It's called a bear trap, right? A trap combination here. Now, one cool thing about breakout pullbacks is the size of the breakout leg. The breakout leg is always a measuring leg. So the size of that breakout leg will tell me now how far I can leave that runner, right? So once we know how big that breakout leg is, then we know how deep that pullback is. I don't know how deep that pullback will be, right? All I know is 1, 2. That's the formula I'm looking for tomorrow. Failure pattern, trap pattern. And again, we'll take some off at the high, right? Big target off at the high. And again, breakout leg, measuring leg. If you want to make more money, add to your winners with a bear trap add-on. Hold on to those runners a lot longer. One of the easiest ways to make more money is to get better at holding on to your winners, and understanding how range breakouts work is an easy way to do it. Those are 4 trades I'm watching on the S&P. Now, believe it or not, those are quite different than we have right now on the Nasdaq, because the Nasdaq, I mean, this thing just went straight up and up and up here right now. Let's talk about the Nasdaq here. Before we dive into it though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and don't forget to share this link with other trading buddies. That small action takes no time for you, but makes a big impact on my YouTube channel, because I get rewarded every time you like, share, and subscribe. Guys, I know we're all busy people these days, and I appreciate you spending a few minutes with me every evening on these videos. So thank you much for the likes, the subscribes, the shares. Thanks for all your support. Now, let's get back and talk about the Nasdaq. Boy, what a nice big run here on the NQ. No doubt about, right? No doubt about the directional bias right now. It's amazing how much more bullish the Nasdaq is compared to the S&P right now. But nonetheless, though, right, very bullish there on the Nasdaq. There are 2 more important clues, though, here on the NQ tick chart. You'll notice right away here, one clue is look at the size of that move. Now, why is that a big clue? Well, think about this. I'm bullish overall. I don't want to buy high up here, right? I don't want to buy high. I want to buy low. Anytime I see a big move in one direction, I always look for a 2-legged pullback and a retest of that high. Anytime I see a big move in one direction, I don't want to buy high, I want to buy low. And in my world, in my experience, almost 20 years doing this now, the most effective way to do it is a 2-legged pullback, buy the dip ultimately, and go back up and retest that high. That's one very important clue here on the Nasdaq. The second clue we talked about earlier on the S&P, look at that little tiny range we saw this morning, that beautiful bear trap we saw this morning, trade room below that trading range. Now, how do ranges work? Well, first of all, ranges love to rotate, right? The amount below, the amount above, the amount above, the amount below. Well, clearly, they busted right through that range. Anytime we see a range breakout, it's like clockwork. It's not an if, it's a when a breakout pullback is going to happen. Now, we talked briefly about this a moment ago on the S&P. Put both of these 2 clues together, and I have 3 different types of trades I'm watching here on the Nasdaq. The first one, you probably already know what I'm going to talk about, right? It's a 2-legged pullback. I want to see 1 leg. I want to see 2 leg. Again, think about a measured move, right? A measured move, an A, B, C, D pattern. And again, right? Trade number 1, I'm not going to pick a bottom on this. I don't know. It might go here, it might go here, it might go all the way back to that 17.25. I don't know. I'm not in the business of just blindly buying at these support levels. And again, I'm sure most of us have already learned that indicators at best are good every once in a while as far as entries. I would rather wait to get that 2-legged pullback, ideally get down around that 54, right? Somewhere down around that area for breakout pullback area. But again, what I do know is that this area right here is a horrible spot to be a seller, right? I don't want to sell low. I want to sell high, right? This is the last place you want to sell. That tells me these are rookies who are selling down here. Nice tight stops, unable to defend themselves. Let those rookie bears, let them try twice. Squeeze those stops with that 2-try failure. And again, you guys are going to be hearing this in your sleep at night here. That failure into that trap combination. You know, folks always want variety, right? Give us some new setups. Give us some new ideas. Guys, that's not how trading works. Trading is repetition. Over and over and over again. Trust me, once you find what works, you'll be doing the same thing every day. Once you find what works, keep on pushing that button until it breaks off the keyboard, right? We're not trying to reinvent the wheel at all in trading. Once you find what works, remember, the markets are run by people. People are humans. They're creatures of habit. We do the same thing over and over and over again, right? So repetition is trading. Get used to that if you want to make money. Failure into bear trap, and again, run back up to retest the high. 2-legged pullback into that bear trap. Now, we may not get that run down, right? We may only get a little shallow pullback, or sometimes it bounces hard off this. What I want to be aware of is oftentimes we'll see a real strong shot down. It'll come right back up. And if it pulls back shallow like this, the goal is to buy as low as possible, right? The goal is always to buy as low as possible after a big move like this, right? So a big move up, I don't want to buy high. Again, ideally, I want that two-legged pullback. That's the ideal. But every once in a while, though, it ends up getting like a strong shot down. It'll kind of V-bottom off that low. And what happens is the bears come in and they start fighting it, right? They start fighting it going higher like this, going lower like this. I want to look for this pattern right here. It's called a shallow pullback trap. It's basically a bear trap like I teach in the free video course, but people have a more difficult time finding this one on the chart here. It's a higher high in price, move right below that low, right? Anytime I'm buying shallow pullbacks, I want to buy as low as I possibly can. A lot of examples of those inside the free video course. You'll hear me call this a two-try trap, right? One try. Two try. Why two tries? Because I have to give the bears the benefit of the doubt. They're trying to get that two-legged pullback, right? That's why I give them two tries there. I also give them two tries because now, once those bears try twice, now I know where your pain is. Now I know where you get stopped out. Now I know where sellers turn into buyers above that high. I don't want to buy up there though. I want to be in this thing once I get that strong green candle closing above that 21 EMA, the same trap signal we talk about in the free video course. So shallow pullbacks, promise me, buy as low as you can. It's always going to be with a bear trap. That's 2 out of 3 trades here for tomorrow. The final trade here is anytime we see a big move like this, I want to get a two-legged pullback, but sometimes we don't get it. Sometimes the market begins to run and go sideways on us. Don't be surprised. Head of that big news number tomorrow morning and tomorrow afternoon. Don't be surprised if we start going sideways here overnight. Now, sideways ranges are my favorite type of market for 2 reasons. One is that ranges act like magnets. Now, I'm not sure if this will be the exact range for tomorrow, but bear with me on this, right? So one is that range is a magnet, and 2, ranges love to rotate back and forth. We like to use things like expanding triangles that we talk about in the free video course. We use things like pendulum swings above and below. Ranges love to rotate. We're overall bullish, so I'm going to use that rotation to buy underneath this trading range. So now that we know more about how ranges work, what I always do is simply once I find that trading range, I wait for a breakout. I want to get into some area of support. Now, unfortunately, I can't go over everything here right now, but the goal is to find a trend line support down here, right? Find a channel support, find a support level underneath that trading range. Remember, don't pick those tops and bottoms. Wait for the pullback, bear trap. Again, 2-try failure, that failure into that trap combination as we go higher. Now, this is where things get fun when it comes to ranges, because ranges love to rotate. So we're not just simply taking our profit targets off at the high of that trading range. That will certainly be at least half the trade comes off at the top of that range. We know, though, the amount below that range, the amount above that range. See, this is why ranges are oftentimes the most lucrative types of markets, because it loves to rotate. So now we know where the market wants to go. I might get a failure in a trap pattern, a failure into a pullback combination. I want to buy off support levels below that trading range. And again, don't use indicators. Trap the bears in with bear traps or failure patterns and trade that rotation. Let that sucker run as it rotates here. One really fun part about ranges, let's say we do go sideways here overnight, is to watch out for the fake out breakout. These are one of my favorites in our trade room. We may see a range brewing here overnight, and then tomorrow morning, we may break out going higher. If that breakout going higher reverses and runs back down again, these oftentimes fool everybody, right? Because it feels like the market has completely reversed. But if you know what you're looking for here, you know this is not a full-blown reversal. It's a range rotation. This ends up being a great spot for a bear trap because it feels like it's a full-blown, it feels like a reversal on a faster time frame. When I was a rookie, this caught me so many times. I'm embarrassed how many times I took the bait on this. So again, if it runs up and kind of fake out breakouts off that high, think about now that run lower. You know this area now, the pendulum swing, same idea, right? It's that failure into that bear trap combination and running it back and forth, right? Rotation back and forth from top to bottom. And, as I mentioned earlier, right? If we were to go sideways here like this, and we were to begin to break out here once again, it's that same thing, right? That two-legged pullback and that breakout pullback you mentioned earlier here on the Nasdaq and the S&P. Remember, trading is repetition. Once you learn these patterns, just keep on hitting them over and over and over again. The key is filter them with that 60-minute overall directional bias. Guys, that's the game plan for tomorrow. Now, don't forget, speaking of tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. I'll put all the important links you'll need to learn more in the description of the video. Definitely start first with the free video classes. Everyone loves the trade examples and the examples there in the free video course. Don't forget, any trouble getting started, any error messages on the entry form, you can use live chat or call the office if you guys have tech support questions along the way. In the meantime, guys, hope you learned a bunch in tonight's video. Hope you use this knowledge to make a killing tomorrow morning. And hopefully I'll see you sometime soon trading with us, 8 o'clock Eastern time, in the trade room with all the SOT members, guys. In the meantime, my name is Joseph. Thank you so much for tuning in and sticking around all the way to the end. Enjoy your evening. How about those Dodgers? Go Dodgers here tonight. Let's wrap it up with the World Series tonight. All kidding aside, though, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.